Good afternoon and welcome to Money Monday. We all love to go to sporting events, but how boring would it be to go to a sporting event or even watch a game on TV and not be able to keep track of the score, right? We maybe turn away for a minute, we may have missed a play and we're not sure what the score is. We really need to have that data so that we can figure out how our team is doing. Well, if we approach our business on Money Monday, especially from the perspective of the numbers in our business are actually our scorecard. And so many business owners get their financials monthly from their CPA or their bookkeeper, and they barely look at them. And if they do look at them, they're not really sure what to do about it or how to change it. So I'm here to just explain some of the basics, and every Monday we're going to tap a little bit deeper into understanding your finances and the things that drive your finances. So today we're just going to cover the difference between fixed and variable expenses. So what we want to do is that tells us how much profit we've made or if we're operating our business at a loss. The first thing, of course, we all need to record are our sales, our revenues. And a lot of people say to me, is revenue the part I keep or is revenue the money that comes in? Well, revenue is the money that comes in. It's all of the income that comes in. You subtract from that your variable costs, or as I like to call them, your cost of goods or cost of services, and that gives you your gross profit. That gross margin or gross profit number is really critical because a small business operating at a low gross margin is usually in pretty difficult situations. When I look at someone's profit and loss statement, if they are under the 30% mark, I can tell that business doesn't have a long-term future. Now, I'm sure that there are other businesses that based on volume can operate at lower gross margins, but most small businesses need to have about a 35 to 45% gross margin in order to break even and cover what we call our fixed costs or our overhead. So once you have your gross profit, you subtract your fixed costs, and that's how you get to your net profit. So now I'm just going to go a little deeper and explain variable costs versus fixed costs. Fixed expenses, and those are actually they show up second on your profit and loss statement, are expenses that you incur whether or not you have sales. So you're going to have to pay your rent, the same amount of rent, whether you have a good sales month or a bad sales month. So fixed expenses or rent. Utilities might fluctuate a little, but they're still considered a fixed expense. One of the questions I often get is, Mary Ann, why is marketing a fixed expense? Because sometimes I have a marketing expense and sometimes I don't. So it's not fixed. And that's why I don't like the fixed expense term. I like the word overhead or general expenses, because variable expenses are expenses that are incurred because you have sales. So if you're installing a tile backsplash and you're a contractor, the grout would be expenses because of that sale. The labor to have someone go in and do the work, the tile itself. There's all kinds of material that you need in order to do your job, and you're only going to use it for that job. That's a variable expense, right? It's material that you wouldn't buy if you didn't have that specific work to do. So fixed and variable. What we're going to do next, when you join us next week, we're going to explain how you can use this information to calculate break even, because nobody wants to break even. We all want to make a profit, right? So we're going to teach you next week how to calculate your break even, but you have to understand these metrics in order to move forward. We need to understand what are our sales, what are our variable costs or costs of goods, what is our gross profit margin, right? So here's our gross profit, and then you divide it by your sales, and that tells you what your profit margin is in percentage, your fixed cost or overhead, and then your net profit. And next week, I'm going to actually show you the calculation for calculating break even. So gather your data together this week so we can work on that together next week. Hope you've enjoyed Money Monday.